Hello everyone, welcome to another mentoring update. Today's atmosphere might not be great, but I believe that regardless of what's happening in the cryptocurrency market or what's surrounding us in terms of information, it's worth going over a lot of these topics to reinforce. First of all, healthy habits. Secondly, the strategy we once took and often have forgotten about. And thirdly, the fact that it's not all that bad because the rest of the world, all financial markets, and generally the global economy are also struggling. It's not just that. Let me start with an introduction that the cryptocurrency market is serving us some dramatic ordeal, that only we are the ones suffering, that we here in Poland invested in cryptocurrencies. A month, 2, 3 months ago, and once again, fate is against us, we're at a loss. That's not how it looks. Listen, Tesla stocks are down 50-some%, Nvidia, over 30% drop. One of the largest companies in the world fell more than Bitcoin itself, right? Additionally, the entire S&P 500 chart is about 10% down. Nasdaq is down several percent. Similarly, many other companies from the largest industries, not just those in which one operates, in any markets, they are down by several tens of percent, and not just in the United States. So let's start by saying that it's not just the cryptocurrency market that's falling. Listen, everything is falling except for gold, which is doing relatively well, close to its all-time high. So it's important to know that these correlations are constantly occurring and such things happen. We have a lot of volatility in the market and much depends on, now from the United States, and pulling the strings is none other than Donald Trump, right? Indices and cryptocurrencies are at key support levels. Everything is plummeting. And the question is when these declines will end, when everything will suddenly turn around. Does the trend even have a chance at the moment, considering such strong political turmoil, to change in any way? Right. Can these increases suddenly continue in a month or two according to cyclicality, or will Bitcoin, precisely during the summer, could it surpass 100 and several tens of thousands of dollars? Or does everything indicate that the bull market has ended and we're simply entering a bear market? So I believe that today's update is very important. So in today's video, in today's update, I will simply show you what we can see in the long term, what we can see in the short term, which levels are crucial for Bitcoin to watch, what we can do with this knowledge, and what is key. Because I also believe that just watching videos purely for information, well, that's fine, but it's worth having a plan for all of this. A plan, and to spend your time on things that actually have an impact on what we do later and help us. So it's clear that all these speculations and analyses can help, but everyone says something different. When one person talks about declines, another about altcoins, a third about Bitcoin, and a fourth about leverage, it's hard to make sense of it all. That's a fact. But when it comes to the message and such an approach, strategy, assumptions, habits, I believe that's the most important thing you can extract as the essence from these materials, as well as a general vision for the future. If we anchor it in our minds, it makes us stop being a little afraid, that we see the bigger picture and can indeed approach the matter more comprehensively. Let's also check what Wall Street is afraid of in today's material. So, whatever happens, after all, it's the cryptocurrency market. Recently, in these last few weeks, it is definitely in a downward trend. Since December, we are in a very ugly, unpleasant moment where sentiment has hit rock bottom. To put it briefly, in recent days, look, we have encountered situations such as, first of all, Bitcoin fell below $80,000, officially reaching a level of $76,600, making it the lowest level since the beginning of November. Still, if we zoom out, it's not that bad. Yes, it's a level of about a 30% drop, which, look, I'm also showing you a screenshot on the screen. In previous bull markets, such situations have occurred quite often. It's a level not seen for simply 5 months, for 0.5 months, right? That's it. Nothing bad happened in terms of Bitcoin's price. One step back to take 2 steps forward. That's what I think. But the worst sentiment has been since August regarding the general approach of investors in the cryptocurrency market. Maybe even worse. You probably remember, those of you who have been with me for a long time, during Black Monday, how everything looked. Extreme panic, drops to around $50,000 for Bitcoin, altcoin sell-off, or still, some of them were a little more expensive than what we are currently seeing in some positions. So indeed, the sentiment here is tragically low for a reason. The fear and greed index has dropped to 14 points, which is in the extreme fear zone, the lowest level since the bear market in 2022. Additionally, $1.5 trillion recently evaporated from the stock exchanges in a single moment. And I'm not just talking about crypto, I'm talking about one day, and I didn't misspeak, $1,500 billion, counting both the traditional and crypto markets together in a single day. So that hack on Bybit at the time, which amounted to $1.5 billion, is not it. That is 1,000 times smaller outflow of capital, and some theft of a wallet, which, by the way, everything is just functioning normally again, has returned to favor and normalcy. I didn't even think about withdrawing money from Bybit because I didn't have the need. I was even in contact with Ben Zhou, the CEO. I asked. It was even a bit of an intellectual puzzle for me, because I don't have such a problem. I have some liquidity. I have friends who are happy to provide some DeFi loans, and so on. I even asked him if he needed any ethers to cover that liquidity. On the day when the hack happened, he said, "No, don't worry. I've got everything sorted out. Tomorrow the loans will be repaid, and it's all good." So just, the exchange is operating. As it should, everything is still fine. Soon there will be a license, more bonuses, drops, some cashbacks. But the point is that in one day, 1,000 times more financial resources evaporated from the capital markets than what happened. The hack on my bit. Nasdaq fell by 12% in 2 weeks, which is one of the largest drops since 2020. Let's move on. Funding for Bitcoin futures positions reached its lowest level since October 2023, when Bitcoin was valued at $28,000. Bitcoin ETFs are experiencing their fourth consecutive week of outflows. Last week's net outflow amounted to minus $900 million, and everything doesn't look too promising, does it? But if it's any consolation for your altcoin portfolio, the fact is that you're not the only ones. With unrealized losses, maybe this information will just lift your spirits, because the market isn't spoiling anyone right now. It's tough. Most people are losing, not just in crypto. It can simply give even the biggest players a hard time, those who think they're doing well, but often it turns out otherwise. So if you have a few hundred or a few $1,000s in your portfolio, know that at least Trump also got hit indirectly, because his project, considering the purchases they made, is at $110 million. Losses, so it's probably not something drastic for them. But still, even people associated with Trump lost money on cryptocurrencies currently, so it's quite ironic and paradoxical that he himself actually led to this. Moving on, just see here that 65% of Liberty Financial's losses are due to Ethereum purchased at much higher valuations. And the question is, are they worried? Are they considering selling at a loss? Well, personally, I doubt it. They're holding, waiting for higher valuations. They'll probably soon start buying again to average down the price. And just like that, continuously, as is done in the markets, considering the entire range somewhere there. These various things that we can potentially lead to, considering the lowering of this price, just over and over, because it ultimately makes our valuation of these assets much lower. If we do regular DCA, and these assets, simply, if we believe in them, can rebound despite the current declines. So, look, as I just presented to you, the market. Lately, it's been flooded with a wave of negative news, fear, even mass liquidations. And there have also been, of course, very positive events in the long term recently, but they did not translate into increases. This refers to decisions such as the creation of a strategic cryptocurrency reserve in the USA. This caused, as you well know, a short-lived pump, increases, strong revival, and large trading volumes on exchanges within a few hours, but led to the complete extinguishing of these increases on the second daily candle, resulting in a decline. And then it triggered even stronger declines, so that sell-off was enormous. That candle looked awful. Look at how it looks. I'll show it on the screen for you too. That increase, from 80-something to 95 on Bitcoin, and the next day, boom, almost the same, or a lower red candle. A few words about the executive order itself, which came into effect last week. This is about the Bitcoin Reserve Act, because the market rather showed disappointment with this event. But personally, I believe that in the long term, this is very bullish news for the cryptocurrency industry. Because who would have thought just 3 years ago, when Luna and FTX were collapsing, that Bitcoin would become a reserve asset of one of the most powerful countries in the world, right? Well, no one. This is a historic moment. Since the USA recognizes Bitcoin as a reserve element, other countries might start following the same path. Once the domino effect starts, institutional adoption will accelerate, and market fundamentals will strengthen even more. But ultimately, there's disappointment again, right? It turned out that for now, the USA will only retain the Bitcoin it currently holds and will not purchase new ones. It also won't buy any other cryptocurrencies. So let's not expect miracles right away. For now, the first big step has simply been taken. This will allow crypto to become a very important element of the modern financial world. And I think that in a few years, governments of countries will actively buy assets like Bitcoin or Ethereum. Sooner or later, it will happen. Besides, the fact that the US government announced that for now, it won't actively accumulate Bitcoin and only hold the Bitcoin it currently possesses doesn't mean that Bitcoin won't start being purchased by individual states. Well, actually, the first steps in this direction are already happening. An example is Texas, where the state Senate passed Bill SB 21 on strategic Bitcoin reserves, and this decision was justified by stating that this project will help Texas secure its financial balance, using a valuable and scarce asset, which Bitcoin undoubtedly is. And supporters of this cryptocurrency in Texas argued that BTC plays a role similar to gold and protects against inflation, which is, of course, a correct statement and a fact, generally and universally acknowledged and known. And the bill still needs to be signed by the governor. But if it comes into effect, Texas will become the first state in the USA to have official reserves in digital assets. And the question that needs to be asked, that we must pose to ourselves, is whether this is the beginning of a domino effect, where other states will follow Texas's lead. Well, interesting, isn't it? Everything indicates that perhaps. Yes, because this map perfectly illustrates that effect. Here we see the distribution of legislative initiatives related to Bitcoin in various states across the USA. We have 73 legislative actions in 33 states, And this shows that the topic of Bitcoin is no longer niche, as more and more local governments are seriously considering incorporating it into their financial strategies. Secondly, 32 states have officially introduced bills regarding Bitcoin reserves, meaning nearly half the country is already actively working on regulations. Thirdly, 26 states have active strategic programs. Bitcoin reserves simply mean that the process of integrating Bitcoin into government financial structures is already happening. And looking at the map, it's clear that the initiative is starting to spread, particularly in states that have historically been more open to innovation and deregulation, like Texas and Wyoming. The key point is simply that more and more states are joining this trend, making it difficult to stop. And where does this lead? The next question. If a few initial states successfully implement Bitcoin as part of their financial reserves, others will follow suit, not wanting to be left behind. This is exactly how Bitcoin adoption by companies looked. First MicroStrategy, then Tesla and other institutions. Now we're moving to the government level. First individual states, then entire countries. And after the USA, Belarus might follow. Just as an anecdote, because, it will influence. As a curiosity, rather on all of this. It won't directly impact the market, but it illustrates very well that the perception of cryptocurrencies among leaders worldwide is simply changing. And the president of Belarus, Alexander Lukashenko, openly suggested to us the possibility of starting cryptocurrency mining in the country. And in a conversation with the media, he stated that since Belarus has an excess of electricity, it would be worthwhile to use it for cryptocurrency mining. His statement is another signal that governments are beginning to recognize the economic potential of cryptocurrencies instead of fighting them. And importantly, Lukashenko referred to the decision of the White House in the USA, emphasizing that since the world's largest economy is starting to treat crypto as a reserve, it's worth considering similar actions. Okay, let's move on. In light of the recent statements by the president of Belarus, I think it's worth mentioning the new regulations from their great neighbor to the east, which is, of course, Russia. Because the Russian cryptocurrency mining industry is currently experiencing a boom, and the demand for mining equipment has tripled in the last quarter of 2024 compared to the previous year. And this is the result of new regulations introduced by Putin, which from November 2024 legalize and regulate mining for companies and entrepreneurs. Russia has also introduced a 15% tax on Bitcoin mining profits, which could be relatively favorable for miners in terms of taxation. And the question is, what does all this mean? Namely, that while Russia previously tried to restrict cryptocurrencies, today it is legalizing and regulating them. And this is another example that governments around the world are no longer fighting against cryptocurrencies, but are trying to control them and benefit from them. We also have El Salvador, right? For example, El Salvador was the first country in the world to adopt Bitcoin as legal tender and a reserve asset. And it seems that such an idea doesn't sit well with those who are simply invested in the old order of the financial world. Because recently, in the face of economic difficulties and the need for financial support, El Salvador turned to the International Monetary Fund for a loan of $1.4 billion. And here, the loan was granted, but with one condition: to limit the impact of Bitcoin on El Salvador's financial system. Nevertheless, the government did not completely abandon Bitcoin. Just this March, they announced the purchase of additional tokens, increasing their strategic reserves to over 6,000 Bitcoins. Whether it's a little or a lot, it's not for me to judge. It's a relatively small country, so they don't have significant purchasing power. And El Salvador, Russia, or Belarus are not the only cases where a state is involved in crypto mining. For example, Bhutan already has 100 megawatts of mining infrastructure and plans for an additional 500 megawatts. And according to certain estimates, they mine between 55 to 75 Bitcoins weekly, and the official addresses of the Bhutanese government are publicly accessible on the Arkham platform. And according to them, they currently hold 10,000 Bitcoins in their reserves, as well as Ethereum. And as you can see here, Ethereum is currently quite far from being accumulated by states, and probably some time has to pass if that happens. We'll see if it happens at all, right? Maybe another ETF will be more favorable, or another cryptocurrency. I've already received information that specific companies are including ETH in their reserves. For example, look here, there's the company BioNexus, which is the first one listed on NASDAQ to formally approve a strategy for its treasury based on Ethereum. So, a large company in the tech industry is indeed buying ETH for its reserves here. So it's not like everyone is upset with it. The company even published a special Ethereum strategy white paper, in which it justifies its decision, pointing out that ETH offers more than just a store of value. A key argument is the ability to generate income through staking, which allows for annual returns of 3 to 5%, making Ethereum more attractive as a treasury asset. So you can see here that what is happening in the USA and around the new president's administration has a huge impact on cryptocurrencies recently, not only in the long term, but also in the short term, causing a lot of volatility in the market. And the specific announcements of the president, his words, as well as actions, introduce a lot of volatility. Well, the market has indeed been quite shaken recently. But despite the fact that cryptocurrencies are known for high volatility, the recent price action is not as frequently volatile as some might think. Simply put, In recent days, on-chain data shows that we have experienced one of the most turbulent and unpredictable roller coasters in this cycle, over which I had no control. I had no control. You had no control. No other YouTuber had control. It just happened that way. Such global turmoil. We are just small players in this world. We can talk, analyze, think, prepare, and mentally fortify ourselves. But what clicks and what strings are being pulled, that's not our story. I simply have no influence over it. And we can estimate, bet on something, assume, just like I do. Often trying to play the market for you and for myself as best as possible with my own resources. It doesn't always work out, but that's just how it is, right? So, Bitcoin itself is also currently experiencing a noticeable increase in volatility across different time frames, particularly on the weekly and bi-weekly intervals. It recorded one of the highest volatility values in this cycle, so it's really being tossed around. Quite a bit, right? It turns out that it wasn't just high volatility, but also cascading, realization of losses and liquidation of traders' positions. And here, I will also touch on one topic, because I have many acquaintances, I know one person, who really operates with millions. And that's in that green currency, which indeed lost value in the cryptocurrency market over the last 3 months. About 90% of their capital, so those millions are no longer there. She made most of her money in crypto, starting with $200,000 or $300,000. She turned it into $5 or $7 million, right? This person is from abroad, not from Poland. I spoke with her a few times. We talked at some conferences or events, and indeed, it made her a bit discouraged. This person, mentally, was playing with leverage. Here, why? She was a trader, and still is a trader, still playing the market. But I doubt that another lucky run like that will happen, where she multiplies her leverage by several times, or even dozens of times within, for example, a year or two. So, she is really an interesting, good trader. But indeed, even that leverage made it so that in a volatile period like now, a person with such extensive experience in such a large capital failed and lost most of their funds. So how can you, relatively beginner individuals, people who do not do this professionally and are just learning something, without knowing about position sizing, without really understanding what the game is about, according to the mathematical assumptions that we realistically adhere to, and everything is calculable, literally number by number, how are you supposed to make a profit in such a volatile market? Playing with high leverage and doing it often, playing with most of your capital? It won't work. It has no chance of succeeding. We are being tossed around in every direction, liquidated. There is enormous volatility, something may seem to us. But even if we open a long and a short at the same time, it doesn't necessarily mean that either of them will succeed, because it can wipe us out, both positions at different times, and neither of them will hold. So it's not as binary and simple as either up or down, because there's also volatility, fluctuations, the funding rate, and other factors. So trading on leverage is for day traders, for people who are really into it, for those who are trying to learn it. There's nothing wrong with it. I know people. I have friends who make really huge money on leverage, and they earn much more than if they were only trading on the spot market. But these are rare cases. These are people who really take it super seriously. So if you're up for it, you can go into, monk mode and fully dedicate yourself to learning. Go through tons of courses, practice trading, pull all-nighters, draw conclusions, and write down every day what went well, what didn't, and what can be changed. Cool. This is definitely for you. But if you treat it as an adventure, as a form of entertainment, from time to time, you play with leverage and usually lose money. Don't do that, because it just makes you resent the cryptocurrency market and nothing good will come of it. So, look at this. The recent sell-off was the second largest weekly drop in this cycle. It is only surpassed by the liquidation of the carry trade strategy on the yen, which took place on Black Monday, August 5th of last year. So, many of you are new to the market and are probably wondering, what have I gotten myself into? After all, this market is just volatility. It's uncertainty. It's some kind of nightmare, right? High losses, liquidations, mega mess. Why did I even do this? Why am I here? Well, welcome to the cryptocurrency market, right? No one said it would be easy. No one said you only make money here. If you want to give yourself a chance for a few 100% profit or more, then why wouldn't you lose? Usually, most people enter the cryptocurrency market when it's high, when there are mega increases, when a lot is happening, when everyone is hyping it up. And typically, statistically, most new people lose because they enter at the peaks, can't withstand the drops, do stupid things, trade on leverage, sell at a loss, buy back at a higher price. There are a multitude of things you can do. And let me know in the comments. Please give a thumbs up on this video if you'd like, and subscribe so I can make a video for you in a few days about all the things I would do now if I were at a loss. In the crypto market, whether it's minus 10%, minus 30%, or minus 100%, let me know if that would be interesting for you. I'll leave something under this video because if there's a lot of interest, I'll gather all my thoughts and strategies. And an analysis of current events that might help you recover losses over the next 6 months, for example, and to do it simply with a clear mind. So if you've lost on leverage, on spot, on futures, on anything, on ether, at least in the form of unrealized losses, let me know and I'll make such material for you. Well, what you're experiencing now is a baptism by fire. Of course, some people here are losing families, some are losing life savings, but that was your choice. It was your decision to invest such funds in the cryptocurrency market, in a place you know nothing about, where you have no expertise, and which has simply caused you to. You wanted to be rich, right? Well, that misled you. No one forced you to invest all your savings. I regularly repeat. And you also have a post from yesterday on Telegram where I shared my approach regarding psychology, about how to handle these losses, how to go through this process in a way that's true to yourself, how to simply then consolidate it into a lesson rather than just a capital loss and somehow process it in your mind. You know, for me, it all just somehow clicks and works. And I believe that this is the way worth acting, not any other. And if you assume that it would be a calm journey to the top, because it seems that way at certain times, well, as you can see, the market quickly dispels those illusions. It's not my fault. It's not the fault of any other YouTuber. It's not anyone's fault that you lost funds in the cryptocurrency market. You can listen to me. You can listen to someone else. You know, it's not like I want bad things for you, that I want to keep you here as long as possible. So you'll be racking up commissions on Bybit until you just stress yourselves out and end up with some mental issues. It doesn't work like that, right? I would definitely prefer that each of you achieve success here, that you have more and more money, that you trade with larger funds, because then, for example, exchanges, where I indirectly from Bybit can earn somewhere more because I provide them with more interesting leads and people who are simply of greater significance to such an exchange, right? In short. So it's not that I want bad things for you. My intention is to do everything that is best in my own, simply opinion, and for my own good. The same goes for you. If I make good decisions for the market and earn more money, then you will too. Sometimes it works out great, sometimes not as well. I usually handle the upward trends well, but not as well with the downward trends. That's the truth. You can do with it what you want. You don't have to listen to me when the market is down. Just choose someone else. It's simply up to you, right? You need to know your weaknesses, strengths, and different areas in life and be aware of them. No one has all the answers, and everyone has their own thoughts related to this. So I believe you can infer a lot from this video and jot it down. Also, a few anecdotes that will help you in the next stage of this cycle. Crypto is a roller coaster of emotions. Here, moments of euphoria are intertwined with brutal corrections, and the only constant is volatility, right? Is that why we're here, why you're playing? Often with leverage too. So it's simply crucial to understand that this is a long process, and success doesn't usually come overnight. So it's a marathon, not a sprint. I repeat this many times, but that's the truth. And those who survive these turbulent times come out stronger, more experienced, and in the long run, better prepared for the next waves of growth, the next cycles, the coming years in financial markets, and in crypto itself. Honestly, because I started with the cryptocurrency market and not, for example, by investing in stocks or ETFs and then moved into crypto, the fact that some stocks have dropped, now 10, 20, 30%, I don't care. I know it will return to its values. I am more confident than, for example, with some altcoins from the top 1,000, which could completely drop to zero, right? So, seriously, if we learn to operate well in crypto, then it will be much easier for us with investments throughout our lives, because the volatility everywhere else is much lower and it won't impress us at all. Just like that, right? So really, the cryptocurrency market is a great preparation and baptism by fire for a lifetime of further investment. What about mentoring? I also transfer funds together with you, and I just want to show you exactly and clearly. So you know, just an observation, a thing. People who have recently joined the market aren't aware of how previous bull markets looked in the past, right? They were characterized by even greater volatility and larger corrections. This didn't prevent the market from growing in the long term, and patient investors were often rewarded, especially those who managed, for example, like I would have done, ideally, to sell everything I bought in July. Almost like I did, because I sold 4.5 in November and December. Leave those funds in USDC, leave those funds in Bitcoin. Alternatively, which would also be a nice option, to hold for a few months and only after selling now, buy back altcoins. That would be the ideal scenario. I would have made double the great money, fantastic percentages. So I also have a situation where I am in this market. For years, I've been buying Bitcoin in this cycle at an average of $22,000. And Ethereum is averaging around $1,900 to $2,000. So it's now around zero. Bitcoin is still at a huge profit, altcoins. And they are ultimately in the positive, considering how much I earned over the years by the end of last year. So it's not that bad. It's just a matter of waiting for your turn until the percentages start working in our favor. If someone joined a few months ago, they don't have that privilege. They don't have the comfort that I do. But I still want to show you that sooner or later it will pay off. You just need to wait it out and average out those prices if you can and earn money in real life. And basically, it's about the fact that every day someone writes me messages like, Marek, how much do I need in crypto to treat it as a job and be able to withdraw from it? 5,000 zlotys a month, right? It doesn't work like that. Even though I have relatively large funds and investments, I don't treat it as personal income. I don't touch that money. They are here in the investment loop. I earn from other sources, from companies, from some private things, from real estate, and I'm slowly starting to accumulate some passive income, right? And all of this means that I don't have to spend this money. I don't have to think about it at all. I don't care about it. I've invested somewhere. It's there. It will be, whether now or in 5 years. I don't know. I'll buy gold with it later or something else. When it starts to grow, that's fine. But why should I care whether it's falling or rising now? I just have a smaller fortune. Periodically, and time passes, and usually in financial markets, it works in our favor. Because over the years, after months, it's better, not worse, because there's inflation because of this and that's what it's all created for. So in simple terms, it's super easy. Seriously, if you look at it from the outside, zoom out, investing is kind of a no-brainer, right? You buy relatively good assets, buy more every month on declines, play with the cycles, sometimes sell, exit, for example, into the dollar for a certain period of time or into gold, then buy them back cheaper, and that's it. That's it. You don't have to watch all the videos, but you need to watch them to reinforce these things in your mind, because that's the hardest part, paradoxically, and it's a super interesting adventure. And it's structured in such a way that our monkey brains always want more. It's actually funny, because I'm in Thailand right now, and it's kind of sad, but since I mentioned it, I'll tell you as a fun fact. I'm riding a motorcycle. I rented a nice one. A 300 cubic centimeters Hasa Rebel. It's like a chopper. You sit high up. It's a bit hard to ride because I live on a hill, about 1.5 kilometers. I'll show you. All right, shall we go? I'll give you a little reconnaissance. Not that I'm bragging. It's just about the fact that somewhere, speaking of those monkeys, I was riding my motorcycle here. And there are no monkeys around here. There are a few hundred on the whole island, and I see a monkey gathering some coconuts. And here, apparently, it's a joke that they hire monkeys on a contract basis to collect 1,000 coconuts a day because people don't want to climb those trees. The monkeys do it anyway, and supposedly have gotten used to it. And there, you know, some organizations here that defend these animals are really, and rightly so, concerned about it, worried that the monkeys are being exploited for work. They say here, no, they collect coconuts their whole lives anyway, and it doesn't matter, right? And various things like that here. And we often think, just like these monkeys, we sit in the jungle and indeed give the impression that we know everything, playing the market our way. We assume that we know better, that we can even complicate things for ourselves and play more actively, but usually, it's about keeping it simple. Such a purely stoic approach makes us earn more in the long term, without getting too distracted by external factors, not trying those levers, not trying some strange projects, something that simply lures us, like flowers lure bees, for example, to get the nectar, to pollinate, or whatever they do. Similarly, altcoins try to get us to invest in them, and they're so colorful, with dogs and various things, a new, mega idea, which soon turns out to be another scam or crap. Oh, I don't know if you hear it. It's some kind of bees or cicadas make noises, or frogs sound like chainsaws and lasers. They keep firing off, but I just wanted to show you what it's about, the mode I'm operating in now, and why these thoughts and not others. So, I hope it was relatively consistent with everything I'm saying. And the point is that sometimes less is more, that this approach, in such a way, which we have simply organized, simpler, which we stick to, which we have devised as a strategy in our minds, makes us earn more in this market despite not overcomplicating things. And this overthinking leads to an overload, and we end up doing things we shouldn't or things we're not familiar with. And finally, we just end up with less money from it, not more. So sometimes that's just how it is. Let's take a look at how the previous bull markets looked. This video is quite long. It will turn out, but I wanted to show you everything, probably about an hour. I would describe this current correction as normal. Paradoxically, despite the irony that everyone thinks it's the end, that the markets won't bounce back, that there's a mega bad sentiment. But see, it's also because we have millions of new people in the market. We have plenty of investors here who have just entered the cryptocurrency markets, who are here in the largest numbers ever before. They have the worst and least informed approach to investing in cryptocurrencies. They are practically tyrannized and manipulated from every side, and they are the ones causing the current market trend, not any other. This is why cryptocurrencies are perceived the way they are now, because everyone gets caught up, talks their own talk, without really knowing anything, and then everyone just repeats it. So the sentiment is terrible, and a correction of around 30% on Bitcoin, 50% on Ethereum, and 60% on altcoins, more or less, is not something extremely tragic, from which the market hasn't often rebounded in the past. Here, I'm posting an old snapshot for you, for example, from CoinMarketCap. Take a look. There were days when altcoins dropped 50% in a day or a week and then rebounded, reaching all-time highs. Nothing significant happened. So if we have bigger projects, I believe we won't end up in a terribly bad situation. So simply, despite the severity of this correction, the scale, remains consistent with the typical declines. In this cycle, it's just that most people are invested in altcoins and meme coins and are at a much greater loss than those who have most of their capital in Bitcoin and Ether. And the question is, as it was in previous cycles, the current decline of minus 32% is significant. In 2017, it exceeded 30%. And for example, the 2019 to 2021 cycle had corrections twice at levels even down to 50%. But let's be honest, what is a relatively normal correction for Bitcoin is not normal. For altcoins, they are at the bottom of their bottoms. Starting with Ether, it hasn't been this cheap since October 2023, which is a year and a half ago. Some people call Ether digital oil. Well, it's a bit of a joke, but you can call it that too. Currently, you know, the valuation is $1,900, $1,800. I must admit, if someone believes in Ether long-term, and I believe that it will continue to improve or worsen, but will return to some values, then such a price is really attractive for DCA accumulation, considering the point in the cycle we are in. I have also frequently tracked the MVRV indicator for Bitcoin for you, which monitors the moments when Bitcoin is overvalued or undervalued. And we have the same indicator for Ether. So listen here. Currently, the MVRV for Ether is dropping below the value of 0. This indicates a significant undervaluation and potentially one of the best investment opportunities of this cycle. And the last time this indicator fell below 0 was in 2023. And the question is whether the price will not drop further. Of course, it might still drop, but it's known that you can't predict the bottom. And is this a good price for DCA and Ether, according to MVRV? Absolutely. So besides Ether, it's obviously about the price of altcoins. The rest of the altcoins are, as everyone can see, quite weak. Crypto bubbles looks very ugly. A lot of red, big corrections on altcoins. Over the past month, only 7 tokens in the top 100 are in the green, or maybe 10, or a few more, depending on the moment. But these bloody bubbles are the bloodiest. They've been in months, and they just look drastic. But I'll tell you, I really regret it. How does the effect of attracting new investors in the market work? Crypto. It just will never change. People will always be more willing to buy alts rather than Bitcoin when everything is going up, despite the fact that from the very beginning, everyone learns the rules of buying when there's blood in the streets, and that you buy. During corrections, usually the biggest money is put in during the peaks, and most people have trouble implementing this rule in practice. And in my opinion, we are currently still in a zone where it's worth doing DCA, and in the long term, averaging these positions will prove to be a good entry, and it will simply ensure that we earn rather than lose. Therefore, if someone is just now entering the crypto market or had less capital allocated here and plan to invest more, now is a relatively appropriate moment. There might not be a much better one to increase exposure to Bitcoin and altcoins. There is a chance that Bitcoin will drop to 70 to 74,000. All the while, Ethereum could go to 1,500, right? It's possible, of course, but we can enter now with one batch in, with another in a few weeks if such a situation were to occur again. So we also talked about this in previous YouTube videos and on ZPP. So the question we can ask ourselves now is, when? Trend reversal, when will further increases happen? And it just so happens that I've misplaced my crystal ball. I need to find it. Listen, as I take a sip of water, I'm waiting for a new one from AliExpress. But seriously, no one can determine with 100% certainty when the trend will reverse. My analyses from everywhere were also like, something should happen. I hope it will happen. I'm betting on something happening. But will it be 100%? I don't know. We're just currently very low, and a trend change might happen soon. But it's very possible that we're facing a second wave of decline, which we've talked about, and a final route of new investors. Because look, as I also described, most of the Bitcoins were recently sold by newcomers to the market, not by the veterans who have been here for months. The vast majority. Here you also have a chart and a post from KDP that I published. So to determine the key support levels for Bitcoin, because it sets the direction for the entire market, we can use very important on-chain levels. This refers to the purchase costs of short-term holders or short-term holders who have historically set the support line for the price. Currently, these levels are as follows. The upper limit is at 130, the average, the base level at 92, and the lower limit at 71. And this week, the spot price fell below the base cost for short-term investors, so it follows that $92,000, which until recently was a support for the price, has now become a resistance. This is known as supply to resistance, flip, and these areas, $70,000, could become a key line of defense for the bulls in case of further capitulation. And if this level is maintained, it could serve as a foundation for a potential rebound. Otherwise, breaking it could initiate a deeper correction and further sell-off. And what does this mean for us? The question is neither more nor less than that. Firstly, declines to 70 to 74,000 are still in play. That a drop to 70,000, it would not at all negate the continuation of the bull market, and it could continue further. It wouldn't be the end, as the current levels are already attractive for accumulating cryptocurrencies. So, for example, see my recent spot purchases, and my last third entries, where I released some stablecoins for this, and a bit of Bitcoin. Simply always, in my opinion, you should always have stablecoins in case of a drop to the previously mentioned zone, to operate with them and be able to buy these corrections, because at least it will be easier for us, even buying 10% more of the portfolio during the drops, to hold through it all, because we will know, okay, hey, I bought something during this drop, I added something, it's not so bad. I have a slightly lower entry, I'll earn from this, I lost more from that. But there's always a light at the end of the tunnel, right? So there's simply no reason to panic. Don't react strongly to them in the market, right? You set something up for yourselves, stick to it. So, another question, why are cryptocurrencies losing steam despite these positive adoption news from all sides? Like I mentioned to you here about Russia, Belarus, Trump's reserves. But if you watch my updates regularly, you know that in conditions where we still have high interest rates in the US, it's currently difficult to find a significant catalyst for growth. I don't want to give you any unnecessary hopium. Those false hopes, I'll also throw in a meme here. But it's just that the situation will change soon, and money will flow into the crypto market, sooner or later. Well, I'm playing this game, I believe in it, I'm arranging everything around it. But besides, well, it's not just a matter of my belief, but an observation of macroeconomic cycles. Because we have very challenging conditions for growth in altcoins, QT is still ongoing in the States, which means monetary tightening, liquidity. Liquidity is lacking. But according to numerous predictions, this is expected to start changing in the coming weeks. And this is what one of the predictions looks like. We have the price of Bitcoin on the chart and the changing amount of money in circulation, and the positive correlation is very clear here. According to this prediction, the liquidity bottom is still ahead of us. So we are most likely facing further declines in crypto. However, later on, the amount of money in circulation is expected to increase. And if there's more cash, crypto will start to rise as well. And such a situation already occurred during Trump's term. We had exactly the same correction in 2017, caused by the same reaction to Trump's policy, which was a stronger dollar and higher interest rates that were later reversed. And the chart shows a striking similarity between the current global M2 money supply and the situation from 2016 to 2018. Because back then, just like now, the initial decline was driven by this M2. We are strengthening the dollar and the increase in interest rates, which caused a short-term correction in the markets. However, when the policy started to reverse, liquidity returned, and M2 began to rise, fueling the bull market. If history indeed repeats itself, the current increase in this indicator may herald another cycle of recovery, especially if there is a monetary policy easing. And the question is, where is the improvement in liquidity supposed to come from? Yes, from lowering interest rates in the USA, because in recent weeks the Federal Reserve is not only facing pressure from President Trump, but also the entire US economy. It remains uncertain due to the trade war. And Trump is keen on lowering interest rates because it would allow him to make a good deal. What? Well, because the USA has a huge debt, over $36 trillion. Every year it has to pay off a part of it, and the interest on that debt is rising because interest rates are high. It's like if you had a loan and the bank suddenly raised your interest rate, then you have to pay more. And this year, according to Bloomberg, the USA has about $7 trillion of debt to pay off. It can be done more cheaply, but Trump wants to lower interest rates, because then the debt would be cheaper to pay off. And there are speculations here that the Trump administration might be deliberately fueling uncertainty in the financial markets to encourage investors to place their capital in safe assets, such as treasury bonds. Because such a strategy could lower bond yields, which in turn would reduce the cost of servicing the growing public debt. The market is likely currently pricing in the change in monetary policy and interest rate cuts in this cycle. For instance, we have a decline in the yields of 10-year bonds in the USA by 15% since January. This is a really significant drop, and it suggests that capital is flowing into treasury bonds, which is a classic flight of investors to safe assets. At the moment when panic arises in the stock and cryptocurrency markets, investors sell risky assets and place capital in treasury bonds, which causes their prices to rise and yields to fall. Furthermore, the stock market is also strongly reacting to economic uncertainty and Trump's actions. And here, the drop in the S&P, right? 10% for the NASDAQ, 12 to 13%. This confirms that the stock market is in a correction and investors are looking for safe havens for their capital. Especially since there is talk of a correction, 20% on the S&P 500, that it's already a recession, right? So here, some are afraid that it could double and we enter a recession. Well, Bitcoin, there's a drop here, 30%, which suggests that speculative capital is leaving the market. Crypto faster than traditional markets, as always, which is typical for the deleveraging phase. And bond yields are going down. And then we have expectations for 100% cuts. And if investors are buying bonds, it might mean they anticipate an upcoming recession or changes in policy. And the current situation resembles a typical macroeconomic cycle. Simply put, when risky markets lose, bonds rise. And if the Fed actually starts cutting interest rates, and the market currently anticipates 3 cuts in 2025, this could mean the beginning of a new bull wave in risky assets, like crypto. Because lower interest rates reduce the cost of capital, which increases the attractiveness of stocks and cryptocurrencies themselves compared to bonds. And in such a scenario, one could expect a rebound in the NASDAQ and S&P 500, because Bitcoin and the rest of the crypto market could also benefit. As in a low interest rate environment, the propensity to invest in speculative assets also increases. However, the key will be the pace and reason for these cuts, because if the Fed cuts rates because inflation is falling and the economy is stabilizing, the market may perceive this positively. But if the cuts are a reaction to a recession, capital may still flee to cash and bonds, which will limit growth in risk assets. Therefore, the next macroeconomic data will be crucial, especially readings of the inflationary situation in the labor market. The next question is, when will these cuts happen? First of all, the FOMC meeting will take place in 7 days. So far, it doesn't seem like anything is going to change. We have a 97% chance of that the rates will remain at the same level, so Powell's conference will be much more important. The market will want to hear a positive update on QE. We just want Powell to say that more printing is getting closer, because after all, the latest projections from the Atlanta Fed indicate that GDP for the first quarter will be negative. So that's already a sign that the economy is in worse shape, which is why he might address this and say that they are ready to print if necessary. We also can't overlook what's currently happening with the DXY index. The dollar is getting weaker. The index just recorded the 4th largest weekly drop since 2013, so This might be worth noting for us, because historically, there have been several instances where similar drops coincided with Bitcoin's bottom moments. There is an analyst from Real Vision who described this exact case, because simply, looking at this recent DXY movement through a historical lens, it's hard not to be bullish on risky assets. Jamie conducted an analysis of signals for 3-day drops of more than -2 and -2.5%, and he noticed that all occurred at perfect bear market bottoms or during local dips in bull markets. And a very weak DXY is something worth keeping in mind, which can help us in the long term. And although a falling dollar locally is an interesting signal for identifying a bottom, I personally still do not rule out that we might drop a bit more before we rebound. Benjamin Cohen also points this out. He also described the seasonality of the traditional market in post-election years, because according to historical data, American stocks and indices perform worse until the end of March. And it so happens that on March 21st of this year, options expire. And Cohen wrote that until that point, stocks might perform worse. Only after this date can we expect a rebound. So we simply have, well, 10 days left until that time. For example, right? So we'll just smoothly and straightforwardly move on to the description of my portfolio, my plays, my approach, to the current market situation, to such personal reflections, those numbers of altcoins, and so on. So just, to sum up what I said, well, it doesn't look rosy for crypto and stocks at the moment, but I haven't changed my opinion. I still believe that we are in a bull market and that we need to endure this rough patch. I personally don't like it either, nor does my portfolio. What I see, but I'm adapting to the new market realities. I'm making adjustments, updates, and update to what I knew, to what I see. I'm ready to make more purchases during downturns, if I had to sell, for example, other assets or convert part of the funds from businesses into crypto. Maybe I'll do that and add more to crypto. But as I said in this video, I don't just want to serve you this information on a platter. In such a form, what would be simply unpleasant for you. And he has money. There's no reason to add more. No, that's not the point. Let's just respect each other and treat each other normally, right? So I'm just reminding you of what I said a few days ago. In this market, you need to be prepared for corrections, for flash crushing, to have lower orders, spot orders, to have protective orders. If we're playing with leverage, if we're playing with alts, then with leverage ×2, maybe times. With max on Ether, Bitcoin up to ×4. I believe, when it comes to long-term and medium-term positions on leverage, I'm not talking about day trading, right? You can never assume that we're suddenly entering an up-only mode, only increases, that we won't drop lower. It will always and usually be the case that the market will play the opposite. Simply put, in the last market update, I gave a 30 to 40% chance that we would drop below my first entry on longs for Bitcoin and Ether. That's what happened on Monday. Such a scenario was in play and unfortunately, with a smaller chance, but it did indeed occur. I have been saying for a long time that I focus on larger cryptocurrencies, mainly from the top 100 or even the top 50. I don't buy smaller altcoins from lower positions because they can drop even 90% and there's a good chance they won't recover. Bitcoin has dropped over 30% from its all-time high, and it's known that altcoins have been hit even harder. And in my portfolio, in recent weeks, the biggest drops were seen in tokens like Pengu, Pepe, and Bitcoin, which are all meme coins, and these are the largest tokens in that sector, practically. For example, Pepe is currently lower than it was a year ago and has dropped over 73% in the last 3 months. What else? Let's start with the most important thing. So far, about 11% of the entire capital, which I had in crypto, the entire portfolio, is engaged in leveraged positions, or is waiting in orders for those leveraged positions to be executed. I'm also counting here stablecoins, which are placed in orders lower on Bitcoin and alts. Ether has already been executed in terms of orders. It was $1,753. I think at the minimum. I believe my order was at $1,780, so almost perfectly set, within 1.5%. This triggered the entry position for longs on Ether, so in that regard, it looks quite good. And I'm glad that we managed to reach a point where the long position was simply executed, and the entry is now just lower. The order was set reasonably. We are already nicely there, 5 to 10% higher, depending on the moment, than the entry price at which the second order was executed. And that's nice. Here, it makes the price compensate a bit. For us, and DCA, even on a 3x long, it played out nicely on Ether. So, as you know, I sold literally about 2.5% of my position spot on Bitcoin. I'm transferring these funds to leverage plays. These are stable coins that I generated by selling Bitcoin, about 1% of my entire crypto capital. So in total, I already have a little over 12% of capital for long positions, and that's where I want to stay, wherever possible. 5% of the 12 is in altcoins, which is about 40% of the total, and 7% of the entire pool. These are longs on Bitcoin and Ether that haven't been filled on Bitcoin yet, because the second order is waiting at 74.5. But when it comes to the other orders, well, some are still waiting on altcoins. The entire position on Ether has been filled, so more and more of the pool from these stablecoins is indeed in these longs. So, how do all the leverage trades look? Currently, what changes am I making regarding position sizing? Well, I'll point out right away that it's about proportions, so there are no misunderstandings. I've mentioned this many times, but someone might just now be entering a position, so they need to know that I have the most capital in longs on Ether and Bitcoin. I also have the most capital in Ether and Bitcoin on the spot market in my entire portfolio. A significantly smaller part of my portfolio is made up of capital allocated to longs on these smaller altcoins. Additionally, there are these new stablecoins generated from selling Bitcoin. On the spot market, I evenly distribute new orders on altcoins, so I set orders 20% below the current valuations, specifically. On PP, Bitcoin, and Tone. 2 orders on PP have already been filled. As for Bitcoin and Tone, I've only entered them once so far, and I previously removed the second orders, so here I am setting these 2 orders anew. I am also setting orders 20% below the orders that are already pending on Link and Bitcoin Cash. So as you can see, slightly, I'm increasing my exposure to longs on smaller Bitcoins, but they are still significantly smaller than my exposure to longs on Bitcoin and Ether. So I wanted to prepare for potential declines in the coming weeks. Some might not go through, but if Bitcoin drops to 70 to 70 something, Ether to 1500, then some more orders should go through. Else will bleed even more, and in this case, I prefer to set my orders even lower to reduce the liquidation price. There's a few percent of the entire portfolio allocated for those longs that haven't been established yet, but it would always help a bit and always bring a bit of a smile if we started growing nicely from those levels. So how does it currently look in numbers? I'll list the entry levels, the current return, and the levels where the orders are pending. So Bitcoin entry at 79,600, second order at 74,500. I would have an average entry around 77,000 to 78,000. The second order for Ether was placed at 1786. So currently, regarding the whole, the entry is around 1,900 and some dollars. Bitcoin Cash entry at 325, orders at 212 and 169, so low, but just in case. Bitcoin at 114, we have an entry, and the second order at 70. Ton entry at 364, order at $2.10. Bull leverage times 2, so it might be low. Link entry at $18, orders at 1160 and 9.30. PP, there's 0.00074. And the last order at 0.00047. Here, as you can see, I just want to avoid being liquidated and not have these positions hanging. This is crucial and most important for me, rather than making a bit more money by buying at this moment and during this drop. I'm waiting for even bigger ones, just in case. So that's how it looks. As you can see, the low order on Ether wasn't unjustified. The order went through, so I'm happy. The most important thing for me is this position. Sizing. I'm just positioning myself cautiously for the altcoin rebound. History taught me this. Some big longs I used to play, losses on Arbitrum, on Ethereum Classic, back then. So simply, longs on small leverage, I lower the liquidation prices with orders below, I add to the position over time, and just in case. If there were to be, like, the crash of the century, I would lose 1/8 of my portfolio on leverage if everything got wiped out, which is almost impossible considering these longs. These orders, but it would have to drop by 80% or 85%. It could happen, hypothetically. It's just that then Bitcoin and Ether, those longs, well, they probably wouldn't get wiped out all the time. And even if they did, I still have them anyway. 7 to 8 of the portfolio in spot, in alts, in Ether, and Bitcoin. And that's what it's all about for me, right? So the biggest emotions and sadness are now with people who put 50% of their portfolio into longs because they're playing with leverage times 10 and they just got wiped out. Well, unfortunately, I don't have a solution for that. Advice, right? I used to do it myself. It's many years of working on oneself, 3 months, although just ahead of you, and that's it. Temptations in life are constant. For various things, right? Well, you know very well, there are many things you can mess up, and trying to recover losses in crypto using a large percentage of your portfolio and high leverage is one of the main temptations if we live and operate in crypto. After these moves, you know how much of my capital I have in this. About 87.5% is in spot positions. Most of it is now in Bitcoin, because I have smaller losses than in Ether. I think I have roughly 37% in Bitcoin, about 30% in Ether, and 20% in altcoins at the present moment. Therefore, I prefer to potentially accept a larger loss, at most on a few, being below the entry, even after a market rebound, rather than constantly increasing exposure to altcoins, or transferring capital from Bitcoin or Ether despite the fact that these altcoins are cheap now. Well, Bitcoin and Ether will recover, make up for the losses, compensate for what we might have lost. And those altcoins probably will too. They are relatively good projects that I chose, but it's not 100% certain they will do so, so I just prefer not to increase the percentage of exposure of the entire portfolio, and that's it. So the current levels for Bitcoin and Ether are attractive enough to do DCA. In my opinion, if someone has the opportunity, you can wait for further declines, but they will be at most a bit stronger. I don't know, 10%, 15% for Bitcoin, a dozen or 20% for Ether, and probably that's it. So you can have a second order even lower if someone feels like it. It will be completely appropriate and wise. A correction on Bitcoin 30%, Ether a few percent, 57, right? So simply having free capital would be useful. Here, as we come to a close, I'll also say goodbye nicely, without glasses. I hope you enjoyed it. Subscribe, comment, thumbs up. Thank you very much, and let me know in the comments if I should make a video for you on how to recover losses in the market. Crypto, what to do to simply be okay when you're down by a certain percentage, regardless of your situation. Take care, bye.